Hi, everyone. Good turnaround Tuesday. Hope everyone's doing okay. And a few of you out there had a good month yesterday. Hi, Brock, Courtney. We're all here. The dream team's here. Shahab, how are you? Good, Tom, if you're here. Nice call. Nice trade on short yen yesterday. I pay attention to what you guys say. Want to start off here with Dixie. We have a confirmed high here on the daily. And I still think there's another push up. Could we work lower first? Maybe, but this might have been enough for a little ABC. Maybe it could work back down towards 98 and a half, but I'm looking for over par to begin shorting the dollar. I was going to do it between 99.20 and par 20. I didn't do it last week. We'll see if that could occur. If that's going to occur, I think that euro could trade back down under these lows towards 107-ish. I think we'll know if that's happening if we start trading back under this 108.15 level or so. Uh, I don't think that euro pound will make a new low with that happening. In fact, it's consolidating after last week's turn. And what's really interesting is look at the Dixie here on the daily. And then look at US dollar Swiss on the daily. What do you think? Hi, go Tom. Nice trading yesterday. What do you think? Why isn't US dollar Swiss up here with what the dollar did? Half as strong, not a good long. So this is going to be one of my shorting candidates. Should the dollar get back up over par? Thinking par 20, we'll see. And what else did I want to cover here? That yields went to a target I'd been talking about for a few months, 135, close enough for government work, and we're getting a little pop here. And then the big debate on the yen, whether it's going to revert back to form or not, kind of looks like it. But, I think, 1030 was kind of a breakout area, is trying to hold it. I actually would give it all the way back down to this breakout. Everyone see this. This was a big pivot. You know, we had a false breakout here, which I thought was going to be a great shorting opportunity, which broke out above these highs. But we have some moving averages here around 109.60. And if you think the metals have peaked, and you could take a picture of this in the silver. One, two. I don't like it yet. Three. So maybe this was it. What held me back is see how you had three in silver, and up until yesterday and again today, gold had one, two. All right. And then I looked at this, and if you're looking to be short the ratio, we're entering a pretty good area. Look at this weekly. Hasn't done anything wrong yet, but this 90 area better hold, or gold, or this gold silver ratio is going to make a new high. I think it's possible. Anyone know why I think it's possible for the gold silver ratio to make a new high? Okay, but I'm waiting for one more high in Dixie Guatam. Anyone want to take a guess? Monica, what makes me think that XAU XAG can make a new high? Okay, because it peaked here. with a confirmed high. Gold new high. All right, so maybe we will get a 3. And let's see what else was there to cover. There was no flight to quality in Bitcoin yesterday. Kind of having a negative week. We'll see how that plays out. And VIX went to one of my targets. I was looking for 25 to 28. I was 2640, close enough for government work. I had this old red line. Uh, Perhaps we're going to come back and try and fill this gap. I don't know. As far as the S&Ps are concerned, um, this is big triangle, so it's not necessarily done. In fact, even if we get a rally in S&Ps here, there should be one more shoe to drop, and we are getting a rally. If you look at this right here, maybe this is completed, A down, and we're getting an A, B, C, maybe back to 3280, 3300. And then you have something like this from 3300 could take you back down to 31, which is my target because of all the confluence here at 3100. I have this speed line. This is the megaphone throwover line, and the moving average is 200-day is at 3050. So if we get a rally back towards 3280 or so, or 33, I still think there's one more wave that this could be A, we get a B, and we get a C. And then if you just do it arithmetically, it's looking more like 3,000 down here. But this is my target for this correction. I think it'd be about 10%. And with that being said, I'm bringing Blake in here.
Yeah, I'm right here.
How are you, buddy?
Hey man, how's it going?
Pretty good.
What's
What are you
what's
thinking?
happening over there?
It's kind of like, when you have big days like that, Blake kind of reminds me of the market being in a little bit of a car wreck. And, the market's in a little bit of shock and trying to regain its footing. And sometimes hard to have conviction about what to do after a big day like that.
Yeah, and what I tweeted a little bit earlier, what I think is happening is we're going to, consolidate these losses,
Okay.
and as I said, or as I tweeted a hour or two ago, that I think we're going to be bouncing into some resistance, and looking at the market, I would assume that this is a going to be a fairly shallow retracement. So,
Okay.
um, you
What's that
know,
Mickey Mouse thing up there on a blue line that red?
that is a
Alarm?
no, that's the timer, or
Oh,
the
okay.
alarm. Yeah, the
It looked
alarm.
like Mickey Mouse
It
to me.
does
All
look
right.
like a Mickey Mouse thing. Yeah, it's an alarm.
Okay, bro.
Yeah, I know you live near Disneyland and all, but no, it's just I think after the steep sell off, we have to assume at this point in time, unless there's some radical news that comes out, that this is a consolidation before a resumption of trend. So when you go A, B, C, D, yeah, that I think you're probably right that we're heading down towards, let's say, 3100 eventually.
Okay.
But that doesn't mean that we can't bounce first before seeing those levels, and I think that's a realistic expectation near term, that we continue to bounce. China is enacting a bunch of measures to really help their economy. um, I, I I I understand, and um, I understand that this is an issue that 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 will be tackled initially, but overall, have we really um, resolved any major issues from a global standpoint? So even if we see a little bit of pop in equities, the question remains, will the markets be able to shrug off the bigger issue that's looming right now with the with a you know slowdown, and I think that's going to be the bigger issue. So all of these near term um, you know little patches that whether it's China or the US provide, I don't know if it's going to help the global economy from slowing down. So therefore, we might get a pop in equities, and we might take out yesterday's highs. Well, I say yesterday's highs. Let me take that back. It'd be last night's highs. We might take that out, but I think that you have to look to sell into strength at this point. So now, I'm referencing the S&P. The question is, in the FX market, what does it do to currencies? And what we saw yesterday, and for those of you that were shorting the dollar yen, congratulations. We stopped right where we were supposed to. In my opinion, we stopped at the 110.30 level. I know I referenced that level yesterday. Why is it such a big deal? Because that was the breakout point. That was the big breakout point, and we stopped there a couple of times. I actually bought dollar yen this morning at 110.36. I think is where I bought. No, 110. No. I'm sorry. 110.46. 110.46 or 44. And I bought it, and I already spun out of it at like 50, 8 or something. But you know, I still think that we can probably get back up towards this 38% retracement once again, near 111, and I would look to sell failures up there if we can get it. And I'm just hoping that's what happens today. We get a rally back towards 111, and then we can sell into strength there. So we'll see if we can do it. I think that's going to be a pretty big level of contention for the market, like the dollar yen. I think the dollar yen, really interesting is the dollar yen is starting to move with risk appetite and risk aversion, which the jury was out. Are we going to continue to move with risk aversion or risk appetite? And I think what happened over the last couple of days have really proved that the dollar yen, like I had mentioned in the week ahead video, old habits don't die easy. And so when you have this risk off, the yen strengthen again. And I still think that that's going to be a case. The question is to what magnitude. If the S&P, like let's say we're correct here, and the S&P drops down towards 3,100. The question that I'm going to be thinking about and looking for answers is how deep of a correction do we see the dollar yen? Because the dollar yen now, if you think about it, we've kind of made this false breakout up here. Does the dollar yen completely reassert itself as the risk off, safe haven currency, the yen does, or does it look at the euro or another pair? But like I said, I think the jury's still out right now, and you just have to be real careful selling the dollar or trading the dollar yen rather. I think that this support's really key. One other thing, and I'll let Stelios talk about this a little bit, because I know he is trading the bond market right now, or fixed income anyway. But if you look at the bond market, and this was my chart of the day yesterday, bonds stalled at this multi-year trend line. So here's the weekly chart, and you can see from the 2011 or 2012 highs, we stalled right at that resistance. Now, if we break out to the upside, if we break higher, that means yields are coming down. If yields are coming down, that would mean that would be interpreted that the dollar yen, which was very sensitive to yields yesterday, is probably going to be breaking that 110 110.30 level. So you got to watch the bond market here, because I think if bonds catch a bid, not like we haven't already, but we continue higher and break out, then that means that the yields are dropping, and that means that the dollar yen's probably coming under some pressure. Now, real quick, before I get into anything else, let me see if Stelios is here. Is Stelios here?
Hello. Good
Hey,
morning.
good morning. So I saw you had some comments about fixed income. So what you thinking here?
Yes, I am slowly starting to short the bond. which is at 10-year bond, so it's this negative 0.5%. No, I've been wanting to short them for a while. The rationale is that we're negative rates. What might happen? They might go even more negative, yes, but it's something that it doesn't, the way I've done it via an ETF, it doesn't cost anything to own it. And also, I'm long metals, so if things get really, really bad and rates go more negative, then it's kind of like a hedge for my metals position. So, but still, either way, I think the world has understood that negative rates really don't work. Sure, they can stay negative for a while, but I think it's something they can easily hold for, this is not a trade to put on and take off in a day or a month. This is something that I want to build slowly and keep for a while. So
what if let's just speculate here that risk aversion continues to pick up from here. What do bonds do, like global, the global bond market? Do yields continue to fall, or do they, do yields finally rise with stocks going down? What do you think there?
Well, we had this conversation with Steve earlier.
Yeah, exactly.
Just
30 minutes ago.
The 10-year, the US still has some way to go. The 10-year US is 135, whatever it is. So that can go lower. I think it's very difficult to fix a situation like this, with lower rates and negative rates, and you can't take them to -2 or 3 or 5%. I think what we'll eventually see, if things get really worse, we'll eventually see more easing in other ways. So quantitative easing, so the central banks just buying everything that moves. Or in the end, we might get helicopter money. I know it's an extreme scenario, but we've seen that negative rates don't really work. They're not going to stimulate the economy. You can bring rates lower, that does stimulate, but after a limit, really the marginal effect is nothing. And we saw the Bank of Sweden's Riksbank coming back to 0 from negative rates. So I think that if they do that, if we get to a point where they're really pumping money like there's no tomorrow, which they already are in a way, then eventually we're going to start to see inflation, and that's when rates are going to start rising.
Are going to explode, yeah.
I think it just seems like a very good risk-reward trade for me. And
if I might chime in, we had this discussion, and it's exactly what Stelios says. And this is not like speculation from Stelios and I. We've already seen a lot of documentation from central banks themselves that question the usefulness of negative rates, or at least of going, really deeply negative, like anything below, let's say, minus 0. Little bit. So once they they take advantage of whatever downside there is in rates, then what is left is accelerating pace of quantitative easing. And most importantly, and we know that they were back in 2011, when there were serious fears of going into a double dip recession, the Fed itself had actually done research about potentially doing helicopter money. So while they were looking into options if the economy went into a double dip recession, we know that they were discussing the options and how they can do that. So once they put that on the table since 2011, and we know that they were seriously looking into the possibility, we know that the next time they run out of ammunition, they're probably going to do that. And once you do that, and for those that don't know, helicopter money is, in essence, in their mind, a solution to fixing some of the problems of quantitative easing, because the whole concept of quantitative easing was throw money at the top of the pyramid and hoping that it's going to trickle down. So once they saw that this isn't actually working because it's mostly propping up asset prices, they thought, okay, what if next time we do a quantitative easing from the bottom up? Which means you take the account of every citizen, or let's say some citizens, let's say below a threshold of income, and you say, okay, I'm gonna debit your account with, let's say, $5,000, and you can do whatever you want with them. So, but a solution like that would immediately be inflationary. I mean, no question about it. So, what would that do to rates? I mean, there is one way after a point. And as Stelios said, the good thing about shorting the bunds is because the bunds are negatively yielding, you can actually be short the bunds without having to spend money to own the instrument. So, this is an idea that can even take, months to play out, and still, you only have to lose from price appreciation of the bund, but at least you're not bleeding money to own it.
All right, that
So
makes
that's the
sense. Okay.
Yeah.
All right. Well, good. Well, good luck with that, because I'm more worried about what happens, in the near term, with the a shock that we might see in global equities.
Oh,
So
they can go more negative in near term, that's for sure.
Oh yeah.
yeah. I got it. All right, very good. Well, hey, real quick before I turn it over to you guys, I know Greg is coming in today, and he's gonna. I think he's coming in. Not 100% sure, but the euro continues to build this like little bit of base here. We're not really selling off. We're not rallying either. It's been pretty. Been pretty quiet with the euro. The dollar yen I covered for you guys. The US dollar Mexican peso, I'm so irritated. I actually had a buy order in at 1894, and we went to 1894.16, so it didn't trigger my order because the offer had to be at 1984 or 1894, and it didn't trigger, and then we bounced aggressively. So when I got up this morning, I was a little bummed out about that. But one thing about the dollar Mexican peso, and if what I'm thinking remains true, where equities continue to grind higher a little bit today, then the US dollar Mexican peso might actually fill this gap that you see down here. It comes in at 1890. That might come into play later on today. Like I said, as long as stocks continue to grind up. One of the other things that I did also want to talk about is the daily sentiment index for gold is at a massive extreme. So am I bearish gold? No, I'm not. But what I think is going to happen here is we're probably going to consolidate, before making another leg higher in gold. So if you're long gold, just be careful, because the like I said, the daily sentiment index is so extreme. What did it come in last night at, Stelios?
93.
93.
Yeah.
So and we were, is it 93 2 days in a row, or we were above that like 2 days ago?
Good question.
I'd have to double check, but I think we were at like 94.
Hold on. I'm looking now.
95.
Gold. We were 94. So
94. So gold probably has to work off some of this extreme bullishness, which should allow for it to pull back a little bit. But overall, it still looks very constructive. And if that's the case, and gold pulls back a little bit, that might give the boost to the dollar yen back up towards 111. Where I think it's going to eventually peter out, because the dollar yen, like I said earlier, we this 38% retracement, it came into play last night at 111.06, and I think this is going to be, where we ultimately find some resistance between 111 and maybe 111.20. But look, if we do see a little bit of a pullback in gold, or consolidation, that might give that the juice to the dollar yen to rally a little bit here. But overall, guys, I think this is a consolidation day following yesterday's pretty massive movement. I may be wrong. We may just flush right through the lows in the S&P. I was thinking, when I got up this morning, I was thinking, maybe the S&P is going to do it, but I don't know. I still think there's yesterday's move was very impulsive. Meaning that it's very strong, and we're probably going to get a continuation, but I just don't know if that's going to happen today. I think today might be that breather. Everybody takes these moves in, reasserts their ideas, and then we continue on from there. So with that, I want to pass it over to you guys. But before I do, just keep in mind, if you guys don't listen to the week ahead, that one too, if you don't listen to the daily roundup webinar, 4 hours from now, I host a webinar for you guys. It's free, just kind of a recap of what happened, today, and then kind of what I'm looking for going into Asia. And it's only like a 10-minute recap, so make sure you listen in there. And then if you haven't tried out Forex Analytics and you haven't joined our community and you want to be in our chat room, make sure you do so. It's only $1 for 10 days. Download the mobile app while you're trying it out, and we'll see you in the chat room. So
And join
guys,
us in the chat
I
room,
want to
yes.
pass it over to you.
Thank you, Blake.
Thanks,
Good luck
guys.
today, Blake.
Hey,
Thanks,
good luck to you guys. Have fun with Grega, guys. Don't leave, because I know Steven Stelios and Dale always provide great analysis, but Grega's views on Elliott waves is going to be very important, especially as we chop around before finding another trend. So
The wizard.
the Wizard of Waves. All right, we'll talk to you guys soon. Thanks.
Bye, Blake.
Thanks, Blake.
Get your surfboard out.
Yeah.
Good morning,
So,
guys.
morning,
Good
Dale.
morning.
So I know the main event again still remains the virus and how it's gonna go. We had more cases in Austria and Croatia and Iran and all over the place. And although people are trying to talk down the risk, like Donald Trump himself tweeted that we're close to a vaccine. I have no idea what he was thinking.
He's developing it himself, so he knows what he's speaking about.
But I keep saying this in the chat room as well. The more I hear these guys sounding so confident, oh yeah, we're gonna fix this and that, the more
Makes you
scared I am
nervous,
about it.
huh?
Of course, of course.
Yeah.
So so that's the main event.
Thou protest too much, Shakespeare.
Yes.
Everything's fine.
Yeah.
Everything
Nothing
is
to
fixed.
say. Move along.
Nothing to worry about, etc.
Go shop. Don't worry about it.
Yeah. So
Even if you get coronavirus, at least you will have a new television.
Yeah, buy some Kleenex
Yes.
and toilet paper. That seems to be the number one thing that people empty the shelves in all these countries. I think there's a black market in toilet paper in all these countries.
Yeah.
Stelio, that's a good business idea. Let's start stockpiling toilet paper for when the time comes.
2-ply. You don't
Yeah.
want that one-ply stuff. Steve, I'm looking at your yen chart here, and I know this level that we've held here is important, but you have the same trend line that Blake does. So we
Yeah,
could we could pull back to that blue line
We can, yeah.
and still be okay. And I'm wondering where that comes in. 109
At 110. At 110.
That's at 110 even.
Yeah.
Blue line breakout. Okay.
Yes. So, that makes it very hard for me to advocate to somebody to be, short USD yen as long as we trade above 110. And even if you want to be short USD yen because you believe that the risk of environment is going to continue, USD yen has already proved that it's not the best proxy to be short risk at the moment. So, I mean, if you believe that there's going to be more risk off, just, go ahead and trade the indices, trade the bonds, trade other stuff, because USD yen has already broken above a multi-year trend line resistance. Now, if we go ahead and break down below it and we start picking up some momentum, then I can be very, very bearish because we can be talking about a false breakout. But until that happens, no way I would be shorting USD yen. So as long as we're above 110, I would remain quite cautious. Now, as you see, we found resistance at the parallel of this trend line support. Gregor was talking about it yesterday, actually. So, if you want to be bearish, at least, you have the, you have the argument that, first of all, we didn't produce a higher high because we stopped shy of that 112.40 high that we had there. And second of all, that we found resistance at this ascending channels trend line resistance. But as I said, it's very hard for me to to take the other side as long as we trade above 110. So I remain sidelined here. I was initially I was unlucky enough that yesterday I didn't get triggered in adding to my short position when we rebounded here, but I got triggered. Oops, sorry, the wrong instrument. But I got triggered overnight while I was asleep because I had a position to add 1/3 to my short position at 32.55. So now I'm like 80%. I have an 8% of a full position being short. My first entry was at 33.78, so almost at the highs. I added a little bit here, and there is a chance that I will be able to add a little bit higher as well if we do something like this. So if there are two scenarios here, in my opinion. Scenario number one, that we build some type of a bear flag looking like this. Scenario number two, that we just consolidate in something like a triangle and we go straight down without breaking above the 3260 highs, overnight highs. But in any case, as you see, I'm looking for a continuation lower, whichever of these two scenarios happen. Greg is going to be with us today, so actually we can.
Hey, I'm here.
Hey, there you are. Okay.
Yeah, I'm here. I'm just setting up some.
Okay, so picking up from where I left it, speaking about the USD yen and the S&P, what do you think about them, Gregor?
Just let me share the screen.
Yeah, go ahead.
Okay, so you mentioned dollar yen. Well, I still think that it's very important to understand that despite this very strong move last week that we had, there is still a potential incompletion of this triangle. Actually, there is still a range, ongoing range, unless you see the important swing highs or swing lows broken. And if you look back to 2019 highs, they are still in place. Okay, so in my opinion, there's, even if you have a trend line broken, it still may not lead to a real breakout unless you also have this horizontal swing broken as well. So in my opinion, this is still fits to be like an ongoing triangle, and wave E could maybe unfold at the same time when we see risk of coming in play here. So in my opinion, there is a chance that S&P 500 is making an ABC setback, a higher degree correction, and at the same time, obviously, dollar yen cannot go higher by himself. So in my opinion, this current reversal to the downside that is happening is still in line with this triangle. And ideally, as I said, we will see a move lower for a wave E setback. Now, looking at the daily, as you said yourself, there's this trend line that has been tested and we are reversing. And that's this 2019.
Yeah, we didn't actually break above it, which is definitely not, not helping the bullish case scenario. I agree with that. But on the other hand, as I said, Gregor, I find it quite tough being short above 110. So, between 110 and 112.40, I would personally just stay out of the way. You know what I mean?
Yes. Actually, from an Elliott wave perspective, we still haven't seen this overlap with 110. Okay. So it's very, very interesting and important level actually that should be overlapped if
we are to go lower,
top in place. Yes.
Yeah, I agree with you. 110 is key, absolutely key pivot for this market.
Yeah, exactly. So if we take a look at the S&P 500, okay.
Oh, you're still working on the house?
Actually, no. They're working something outside around the office. I'm sure are the neighbors. It's loud. It's too loud. I don't know because I don't.
No, it's okay. I can hear it, but it's not not a problem.
Okay. So we are here looking at the S&P 500 daily chart and looking for a push into a fifth wave after we complete this fourth wave setback. So in my opinion, this is still a technical in uptrend as long as we are trading above this trend line support. Okay. So I'm thinking about an ABC in progress right now, looking at the 4-hour chart. Ideally, we will see a 3180 retested after this wave B bounce. Now, wave B bounce could maybe fill this gap, and then we see more weakness. At the same time, my concern, the only concern would be if we get this wave B rally, that this could also transform into head and shoulders.
Exactly. I was about to tell you that. I didn't want to interrupt you. That if we go up there, then it's going to start looking like a very nice head and shoulders top. And keep in mind that usually tops are a process. I mean, head and shoulder would fit very nicely with such a scenario, right?
That would take it down to Grega's invalidation line. It would measure about 3,000, right, Greg? If it
Yeah,
turns into
yeah,
head and shoulder.
exactly.
Yeah. Okay.
So if we go back to 3,000 based on head and shoulders projections, which is obviously still far away after all.
Yeah.
Oh, yeah, it is.
Yes, but if that would happen, then obviously this fifth wave would be invalidated. Okay, but somehow I would be happy to see this kind of scenario, because then this whole rise from December lows of 2018 would be seen as a free wave move.
Yeah, and an A, B, C, right?
Exactly.
With C being a 5 wave up.
Yes. So even if we would fall below 3,000, it would suggest that because this was a free wave rise, markets can either complete an uptrend in a free wave structure or in downtrend in a free wave drop to a new extreme, meaning this would be part as a higher degree correction. And that would be one of the valid scenarios where you would expect a very strong continuation lower for a wave C. As Dale said, if we will see an overlap with or a break below 3,000. That would be also be probably very important and very closely tracked psychological level that would probably make even more people bearish as well, in my opinion.
Because it's a very round number, 3,000. Yes. You know, going back below 3,000, yeah, it's going to start, you know, getting perma bulls quite worried for sure.
Yeah,
well, that would negate a breakout.
Yes, and if we go with below 3,000, okay, what would happen with DAX? Then I think I would have to pull this chart over, which is actually a very bearish scenario. Let me just pull this on. Okay, here it is.
Yeah, ending diagonal, right? Yes. In the DAX.
Yes, and what is concerning about this potential bearish development here going further is that we, as you said yourself yesterday, that we moved to a new high for just temporary time. We haven't seen a breakthrough and we turned down. And another important thing is that in ending diagonal, each leg is made by 3 subwaves. And I can see, if I zoom this in, I can see 3 subwaves, A, B, C here to a new high. So now imagine if we really see a S&P 500 moving below 3,000, and at the same time, if we see this market also maybe moving towards this trend line support here, connected from 2018 lows as well, then I really should start considering much lower prices and much deeper pullback. But that's just very aggressive bearish scenario, which I think it's still too far away. As I said,
and speaking of which, what you're showing there, look at the monthly candle, Grega. I mean, this market is in danger of actually producing, if we close a little bit higher, a little bit lower the month, just a little bit lower, we're going to have ourselves a key reversal, a key outside reversal on a monthly chart, right? Which is a very, very, very bearish signal.
Even January was already indicating that bulls are not sustained here.
Yeah,
it was a nice reversal as well. And now those just some stops, new stops were just cleared a little bit higher, and then we see a reversal. So definitely it's not looking good. But as always, as you know me, I look for minimum expectations, and that would be a free wave drop. The only question is if this free wave drop will unfold later into a 5-wave movement to a bearish trend, or we will see just a corrective setback. But for now, I will go to a corrective setback. But even from that perspective, I think that this third leg of decline, if we go back to the S&P 500, this third leg of decline could be still very interesting, maybe to catch some weakness, or maybe even you will catch wave 3. Who knows? But markets
then bring us a lot lower.
Yes, but
so in any case, you expect that the first bounce is going to be a great selling opportunity either way.
Yes. In this gap zone. Yes, exactly. But I also think that coronavirus is, fear is probably spreading much more faster than coronavirus itself, which is obvious. So I'm still thinking that investors, traders, or crowd in general will very quickly try to pick up any positive news regarding coronavirus. If they will came out with some new solutions, some new medical stuff to prevent the spreading, then even if that would be just few highlights in the media, it would definitely be very optimistic for the markets, and I think that markets could very quickly found the support. There's no doubt about that.
I agree with you, although as I've said since you were yesterday, as I've said, in my opinion, the coronavirus thing might fade away faster than many believe, and let's hope so. But I think the market has another very, very strong potential factor that can lead to a sell-off, and that has to do with US politics and the upcoming US elections.
Yes.
So, that might start coming into play, sooner rather than later.
Yes, because if Sanders maybe will be have a good chances to win the elections, you mean, right?
And you know something, Gregor, if the coronavirus threat persists for a little bit longer, then we're going to have the following situation. The lower the markets go, the higher the chances of a Sanders win is going to become, because Trump has bet everything on the market horse. So the lower the markets go, the higher the Sanders chances of winning. The higher the Sanders chances of winning, the lower the market will have to go. So then it's going to be a self-fulfilling prophecy. You know what I mean?
Let me ask you something. Did Trump? I haven't been.
Speaking of which, Trump actually, in
about
essence,
coronavirus, if he was speaking something or at least mentioned.
Yes, but he also in the tweet storm he had today, he actually in essence validated what I'm saying now, because he wrote that if Sanders wins the elections, the market is going to crash in a manner that we've never seen before. So in essence, probably he didn't realize that when he was writing it. He even adds more fuel to the fire, that if for any reason the stock market keeps being under pressure, then probably it's going to continue lower, because he accepts that Sanders,
the risk, yes.
Yeah, Sanders winning is going to be extremely bad for the markets, and the higher the Sanders starts polling, the lower the markets will have to go to compensate for this probability.
Did Trump had anything to say or regarding coronavirus?
Yeah, he wrote that they should have it under control quite soon, because they're working in a vaccine and things like that. So in essence, yeah, he did write about the coronavirus.
Okay, I just think that he will grab this opportunity regarding coronavirus very soon and try to support the prices and stuff.
For sure. I mean, if we get something really positive about coronavirus,
or
for
at
sure.
least only he can just be positive regarding that.
Yeah, although having to do with something like a virus, I doubt that the markets will care much what Trump has to say if there is no tangible evidence that we actually have something that works against the coronavirus. Either some evidence, for example, that as the weather improves, that's going to go away on its own, or something tangible like indeed a vaccine being developed, or finding from existing medicine, because they've been trying several forms of medicine that we already have in hand as potential cure for coronavirus. So they've been trying with HIV medicine, they've been trying with Tamiflu and some equivalent drugs that are for existing flus, viruses, and everything else, and they're hoping that some of that might actually prove to be doing the work against coronavirus as well. So if something works, obviously that's going to be good news.
Yes. Or he will came with some kind of idea regarding taxes again, if companies in US would be hurt because of coronavirus. something like China decided to do.
Yeah, although as I was explaining yesterday, the problem with something like a coronavirus is that it creates a disruption in economic output, and you cannot fix a supply side disruption by providing looser monetary policy or tax benefits.
Yes, because losses are much bigger, probably.
Because in essence, what you do is you let more disposable income bid up less products. So in essence, what you will do by definition in such a case of a supply side disruption by, in essence, increasing demand, because those solutions are made to increase demand. So if you increase demand when supply has a problem, what you do by definition is that you create inflation.
Yeah, agree.
So what else? We have questions about the Euro USD.
Okay, let's go to USD.
We have questions about gold, silver. By the way, I know that you have a strong outlook about gold. I know that a lot of people took yesterday's reversal as a great sign, because I've seen people looking for a reversal lower in gold and silver since 2 months ago. So, many of them feel vindicated by the reversal we had yesterday. What do you think? Short-term setback or long-term top?
I'm looking firstly here on a monthly chart. Okay, there's still a healthy but very deep ABC rise. I know that Stelios probably hated this chart, I believe. And but still, I have to respect the FIB levels that we are facing right now. It's a 161.8% of wave A. Now, in textbook Elliott wave structures, when you are tracking an impulse, meaning that you're looking for a 1, 2, 3, 5 structure, you will see that at 161.8% of the first leg, that's the area where wave 3 will stop. Okay, so let's assume that this would be a wave 1, you have a wave 2, you have a wave 3. You have the same resistance area from where you would be expecting a setback. Okay, and now I also can add to this that we are testing, or not testing, but it's not far away, this 78.
From the 78.6.
Well. Yes, I think that they mentioned this one yesterday as well. So I think that even if this trend is bullish and it will continue, it should continue after a setback, as you said yourself. And looking at the daily chart, we also have some FIB levels of this latest big consolidation, where also prices could be maybe facing some slowdown here. Of course, the most important at this stage, when you have such a strong volatility, would be maybe on a smaller time frame. So looking at this reversal from the highs, what is very important for me, at least now, is that we haven't seen, when this gap was filled, the Sunday gap, I would normally expect on a correction that immediate uptrend continuation will resume
from
after
there.
that.
Yeah.
But we have seen another drop to the lows, meaning that bears are still trying to fight the bullish reaction that we have seen since Sunday. And also, we can clearly count 5 waves to the downside. So I would assume that at least in the short term, we will face a deeper pullback. And maybe this, as we discussed with Stelios, I also said that probably this pullback, maybe a deeper levels on gold, could be in response to maybe a stock short-term rally for that wave B that we talked about earlier, to fill that gap. So maybe, at least in the short term, I think that you better wait maybe on the lower prices on gold. If you really
I have 1610 as a nice downside target, if that's the case.
Okay, let's see, 16. I mean, 1610 is probably the high. Yes, it's 1610 was also swing high. You are looking that level. Definitely. Yeah, of course it makes sense. I mean, technically, or from a book perspective, trend is up as long we are trading with current price above the previous swing high. So clearly that's still an uptrend, and it's a very good support if we see a retest.
Yeah, 1610 and 1590 are the areas I'm looking for buying into this pullback, because personally I will be treating a pullback to these levels as a buying opportunity.
As a buying opportunity, yes.
Yeah.
I mean, but watch out this. I am also was looking at this chart. It was, we have it here. Not sure. I posted on Skype. It was the ETF for gold, where we have seen a nice increase in volume yesterday, and right moved to a new high before we are now facing this reversal. And we know that extreme reading in volumes can very often
Often indicate, indeed, often
a top
indicate,
a
yeah.
bottom. Yes, exactly. So, and I'm sure that sentiment is above 90, right? And
Oh yeah, yeah, a lot above 90.
Is at the highs for what, the last 2 years or so. So definitely with some extreme readings here about gold.
For sure. That's why I do indeed believe that there is a good chance that yesterday's high will be the beginning of a deeper pullback than just consolidating horizontally. So I'm 100% with you that probably shorting the next rebound in gold for a short-term trade might make sense. Personally, I'm likely to stay away from that.
Yeah, that's probably the best.
Yeah, and the reason is, as you very well know, if this is a very impulsive market, and indeed this is let's say a fourth wave of the third one, especially with whatever is happening globally at the moment, you might be short looking to make, let's say, $30-40 of downside, and then you might get a big headline coming through and gold jumping like $50 within a day, like, almost instantly. So I really don't want to be in that side of the market and get run over, by some negative headline or whatever.
Yeah, but also let's take a look on 10-year US yields. Okay, we are here also in a fifth wave down. Okay, and if this market, since we reached a new low here, if this market is really about to form some kind of a support here and at least rally it in 3 waves, then it makes another reason why maybe gold is or can be looking for a limited upside as well here.
Mm-hmm.
Right.
Speaking of which, my first target in 10 years, I've said it since some time ago, is we have 2 extensions, the 127% extension of the last rebound of what you have there as wave 4. And we also have the 161.8% extension of the leg higher that started in September 2017 until actually yields peaked in November 2018. Both of them point to 1.25, 1.28. So that's my downside target for this move. I don't know what you're looking for as a potential good area for rates to reverse.
I mean, here at 1.7, 1.1.
I'm looking at higher, actually, at 1.25.
Okay. Yeah, that's definitely, it's not far away.
Yeah.
Anyhow, so you mentioned euro dollar as well, right?
Mm-hmm.
Yeah, so euro dollar, I mean, since coronavirus is spreading in Europe, and since unless you have any other news regarding the European budget, since the UK left the Europe, I think we don't have anything new, right?
No, not really.
France and Germany does not agree about the budget, and the rest of the countries as well. So as long as this is under question, I think that a euro dollar can still remain under pressure, and coronavirus will probably spread here in Slovenia as well. I think that maybe already in the next 24, 48 hours. So I think that as long as that's the trend here, the euro dollar it can be a real sell. I mean, a real hit for potential drop off here on euro dollar would be if maybe the numbers will increase very quickly in Germany and in France. That would probably send this market much lower.
Yeah, makes sense.
Yes. So,
and in any case, this rebound so far, doesn't look inspiring, right?
Yes, I was just about to mention that we are here seeing a very strong breakout, very strong extended leg down beneath these 2019 levels, which is now being retested as a resistance.
Yeah.
And you have also on an hourly chart, if you want to spot, as you know yourself, a reversal in any downtrend or uptrend, you have to see 5 waves. Now that's not a 5-wave move, and you will have very difficulties counting this as a 5-wave pattern.
Yeah, it's very overlapping.
Yes, so I'm thinking about this to be a complex correction, maybe
Double
final
zigzag.
high of a fourth wave has already put in here in place, or we are still going to see a little bit higher prices. But generally speaking, there's this 38.2%, a little bit higher. And also, if I compare wave 4 to wave 2 was 105 pips around there, and you have wave 4 also 105 pips coming in right at this resistance. Okay, so technically,
Yeah.
and maybe
So it looks good
mentally,
for lower.
from a macro perspective, I think that euro dollar is, I just don't see a reason why this pair would bounce. Maybe the next thing is that we have to realize that Trump, as we know, definitely is not satisfied with strong dollar, right? So if maybe something changes in this part, then maybe this could be just a temporary bounce to help a dollar to come down, which could maybe
Oh, trust me, he's gonna get his wishes granted, at a much bigger extent than he expects, but not yet. I mean, dollar is gonna depreciate. In my opinion, within this decade, dollar is gonna lose 30% of its value.
yeah. Well, let's see how this impacts the euro. But
Yeah.
even if
Speaking of which,
happen,
the cable seems rather quite a lot more complicated and tough to read. What do you think about it? Because it's a little bit of a mess since it started consolidating.
yeah. So if I look here, I mean, it's just going sideways. I mean,
Yeah.
maybe this kind of a phase is normal because we had some kind of a very clear directional moves last year, right?
Mhm.
There were some very sharp extended legs between this or in the middle of those swings. So maybe just pause a longer one is not a surprise here. And still, I remain bearish here since we are trading below this trendline resistance. And I'm expecting either third wave to the downside or wave C to the downside. Looking at the 4-hour chart, the idea is that maybe we are here making a big flat correction. So it's a very tricky pair to
It
trade.
is.
But the reason why
It
I'm
is.
looking for a flat correction is because whenever I'm looking for a wave C, I want to see wave C to be similar in this to the compared to the first leg, meaning I would be expecting a
The
lower,
5-wave.
but that was just a temporary temporary weakness below that level, which is normally the case when you're tracking corrective price action like a flat, where your wave B moves to a new extreme for just a temporary time and then quickly reverses back into the range.
Initially, cable looked to me rather simple. I thought that we have a wave A being down, a wave B being a triangle, and when we started breaking down, I thought, that's going to be a nice, wave C down towards 127, 127.30, which I would be glad to buy. But then it became quite a lot more complex, so I just left it. I was like, okay,
yeah,
whatever.
it's a very tricky now.
Yeah, I have no idea what's happening here, so let it be.
Yeah, but I have another wave count here, which, I mean, this wave count predicts that we will see wave C to complete a flat. But this wave count, okay, it's maybe even better, but it's a bullish one.
It's a very bullish one, actually. If all this is,
Yes.
yeah.
So just from let's say from a trader's perspective, whenever you don't care if market goes up or down, that these two wave counts you should be tracking. Okay, and this one, the current one, is very bullish, and it's quite interesting because even if you're just familiar with wedges, still this.
Yeah, it should retrace all the way up to, what is that? 132. What is it?
Yes, to around 132. Yes.
Yeah.
So that's why I highlighted this current trend line. I don't have it circled here, but I marked it here. It's a very important region. If we can broke this, then definitely I think that either we go just a wave C to the upside or maybe even to much higher prices. But it looks like that pound is doing much better than euro in general. So dollar changes its flows. Maybe it's the pound to watch. It's very interesting actually to see everyone is talking about the dollar, but pound actually is not doing that bad. since
No,
dollar
not at
index
all,
went to
actually.
the
Not at
upside.
all. It's holding up quite nicely.
Yes, so maybe if you're trading some crosses and looking to buy a very good currency against the very bad currency, maybe the pound would not be the bad idea to look for.
No, I'm with you. It's holding up quite nicely, but having to do against the dollar, as I said, it has now become quite a mess here on the chart. So unless we start seeing some more clear moves, I'm just staying sidelined. I don't really like this price action. I have no idea if it's going to first move higher or lower or whatever.
Well, then don't be penny wise and pound foolish. And thank you very much, Grega, for coming in here and edifying the community today.
Thank you.
Like always, I get clarity when I see your wave structures and your alternate counts, and feel fortunate that I get to look at your work with the click of my mouse on our website.
Yeah, thank you.
Thank you,
Okay.
Grega. Have a wonderful day, mate.
And Steve, I feel fortunate. Oh yeah, I have a good one. And Steve, I feel fortunate that I'm a much more patient man than I used to be from working with you.
You
don't know how to take that.
Feelings are mutual. We benefit
Okay.
from your experience as well, as you know.
Oh yeah, my experience. The Jimi Hendrix experience. That's mine. So Jeff York is with us, and pay attention to Jeff's pivots. I've seen him be trampolines for continuation moves and real nice moves when they're taken out for reversals. So Jeff, without further ado, I'm going to set you up, and looking forward to talking to you again. And maybe Grega could stop sharing. And Jeff here, I'm going to mute you. Where are you now? Okay. Okay. There you go, Jeff. How are you today, buddy?
I'm good. How are you? Can you hear me?
Loud and clear, my Trading Warrior brother. So
can you see my screen?
Do you see the share button? Not yet. There's a drop-down menu with a green box.
Oh, I see it. Okay.
You got it.
And you can see my screen?
Got it. You have all the squiggly lines up here, Jeff. So
great. Let's start.
Go ahead.
Let's start with some. Let's do a little recap with some 2019 stocks. 2019 was an interesting year where a lot of forex pairs and a lot of stocks pulled back to their yearly pivots. Let's start with the Russell. Russell last year came down to its yearly pivot last September, bounced right off of it, and then went up to its yearly R1 pivot back in December, and then broke out to a higher high. So the yearly pivot went from the YP to yearly R1.
Wow.
Bitcoin,
do you see that a lot? That would, or does that make it an interesting year that you'll get both the?
That's actually a textbook year. Price usually trades between the yearly pivot and yearly R1, or the yearly pivot and yearly S1. So that's a normal year. Bitcoin go ahead.
Yeah, let me ask you about your pivots, Jeff. Is it anything proprietary on how you do it, or is it your trained eye from having done it so long? Can other people learn to look for the same kind of pivots as you?
Absolutely, and I'm going to share that with you when I'm done here. I
Cool.
put together my pivots are not proprietary. They're standard pivots that are available on most charting platforms.
Okay.
I use a combination of weekly, monthly, quarterly, and yearly pivots. The yearly pivots I've learned is where the big reversals happen during the year, and the weekly pivots we use for short-term trades, 1 to 4 day trades. That's where the biggest reversals happen during the week. So it just all depends on the time frame that you're trading. We try to match the pivots to your time frame. So
is it better when they're both lining up the same way?
Absolutely. When we see
so you look for even confluence on pivots.
Absolutely. When we see quarterly, monthly, weeklies all together or close together, we have a confluence there. Yeah, we know there's going to be more computer algorithms that are going to be hitting there. So yeah.
Okay. All right.
So last year, Bitcoin went actually in 2018, the low on Bitcoin found support on the yearly S1 pivot, and then in 2019 rallied up to the yearly R1 pivot and then pulled back. And I'll show you where the new pivots are for this year coming up. Some marijuana stocks last year. CGC, Canopy Growth, went up to the yearly R1 pivot at $52 and then pulled back to its yearly S1 pivot at $15. That was a hell of a move. So the yearly pivot
Yeah.
told you last year, if you wanted to get involved in the pot stocks and it was at 48 bucks, you only got a $2 or $3 upside, potential before a possible big reversal. Cisco last year had bad earnings, pulled back to its yearly pivot, and then it rallied up to this year's yearly pivot. It went from the 2019 yearly P to the 2020 yearly P, and then it fell again. So these yearly pivots show us where the biggest reversals are going to happen. US dollar last year went up to the yearly R1 pivot and then reversed. This year, it's already broken its yearly R1 pivot. And I've got some charts for you on there too. Euro dollar last year found support right on the yearly S1 pivot, bounced off of it, and then came back up to its 50% Fibonacci retracement for the year. This is the yearly 50% fib, that red dotted line. But the yearly S1 pivot caught the low. Here's a cable. Also came down to the yearly S1 pivot at $1.20 and then rallied. It took several months, but it finally made it back to the yearly pivot. One of the things that I find is price comes back to that yearly pivot 80% of all years after it tests a yearly S1 or an R1 pivot. The yearly P is what I like to call fair value. And the yearly P is basically just the previous year's high plus low plus close divided by 3. It's just a real simple math calculation.
And that's a real nice hit rate, Jeff. So, I mean, if you were patient enough,
Yeah.
and you probably don't get, I mean, on average, how many of those signals do you get a year?
Not very often. And not very, I mean, price doesn't come down to a yearly pivot very often. So when it does come down to a yearly pivot or come up to a yearly pivot, it's a rare event. And they work 75, 76% of the time.
Okay, so it's not going to even happen every year, is it?
Correct.
Okay.
Correct. But the yearly pivot usually does happen. The yearly pivot gets hit 80% of all years.
Okay.
Silver
I was
last
wondering
year.
if I was just going to have the patience of Job to, wait a couple years for a trade. I think
No, the yearly
I'd be
pivot.
jonesy.
Yeah, the yearly pivots usually get hit. Usually it's the R1 or the S1, depending. We also like to call the yearly P, that YP. That's the bull bear line for the year. When prices below that YP, we have a bearish bias for the year. When prices above the YP, we have a bullish bias for the year. Silver last year went up. SLV last year went up to the yearly R2 pivot, also silver futures, and then it pulled back down to the yearly R1 pivot. One of the things I've noticed also is price likes to move between these yearly pivots. It likes to go from pivot to pivot.
All right, when it takes out those lines, Jeff, and tactically, both of these took out the purple line by, marginally. Do you wait for it to turn back above the bottom line if it takes it out to get confirmation that's going to work?
Actually, well, you can. There's lots of ways you can do it. I'm an aggressive trader, so I usually place my bets right on the line.
Okay.
But the reason why it went below a little bit and why it went above a little bit is because there was a weekly pivot there that it went to.
Okay. So when you just go with it at those lines, then do you have what I would call a money stop, where you're willing to risk just a certain percentage of your account on that idea?
Yeah, usually when I'm trading these yearly pivots, I'm usually willing to risk 50 cents or $1 to make $3 or $5 or $10 is usually the way that I look at it. But a lot of times I'll look at the weekly pivots when price comes down here to a yearly R1 pivot and I'm looking for a bouncer. I'll usually look at the weekly pivot and I'll use a stop below the weekly pivot.
Okay, so you had confluence there. It's not shown on the chart, but you had confluence.
Correct.
Okay, got it.
Okay, I just lost my chart. So that's SLV. Where else are we here? Is that my last chart? No.
That's the end of the history lesson.
No, it's not.
Okay.
We got TNX. Here's 10-year yields last year came down to the yearly S3 pivot and then bounced back up to the yearly S2 pivot.
Yeah.
So it works on lots of instruments. Tesla last year. The low last year was right on the yearly S2 pivot at 178. And we know it went up this year to the yearly R4 pivot at 960. So I'm a dip buyer. I don't short stocks. I like buying good quality companies when they go on sale. This is one of the companies that I recommended and we bought last year.
Did you ride it, just out of curiosity, Did you have any left when it was trading 900?
Yes, half my position. I sold half of it.
Oh
when
my God! You know either when people stay there, I have a very hard time. I make the tough money, Jeff. You know, the move where it's just starting to get going, and I had to gut out a turn and all of that. But for to be there for a parabolic move, unless you use like a trailing stop, I've always said either you have to be naive because it doesn't happen that often, or greedy. So tell us how, there's one thing to make a great call, better to make a great trade, but the best is a great hold.
What
Tell us how you were able to hold it in a parabolic move like that.
in my
900.
IRA, okay, I like buying good quality stocks in my IRA and holding them long term. And one of the things that I do is I buy the dips when prices come down on the S2 pivot. When it doubled, when it got back to 367, I sold half of it.
Okay,
I
you had a
got
free
I
trade.
got my investment back. I let the other 50 shares ride. I only had 100 shares.
Okay, but okay, so there is some money management there.
Right.
So
Oh,
yeah,
absolutely.
okay,
Absolutely. You know, I
right.
didn't feel Tesla was going to go broke. I didn't believe in the Tesla Q that was going around on FinTwit. I'm a big Elon Musk fan. I don't know if his books are cooked or not. I really don't care. I just trade the pivots, and the pivots told me this was a good place to try a trade, risk $1 or $2, and man, made a lot more than that.
Do you want to go to Mars on one of his spaceships? Are you
No.
that much of a fan?
No, I'm not that much of a fan. I have no desire to go to Mars.
We can see how the pivots work up there, man. All right, go.
I live on a barrier reef island off the coast of Florida, and I'm very happy here.
That sounds pretty nice. Okay.
Chinese yuan last year. Everyone talks about how China manipulates their currency. Well, I guess they must be using the pivots to manipulate.
They subscribe to you, man. Huh?
They must.
The PBOC. You check your customer list. Go ahead.
Because the low last year was right on the yearly pivot, and the high was right at the yearly R1 pivot.
Nice.
Same thing also on the offshore. Here's a dollar yen. Last December, it came up to its yearly pivot at 109.60, and then it pulled back in January to the 2020 yearly pivot and bounced off of it. And we all know where it's at today.
Yeah.
Here's another longer term trade of it. It went from the yearly P, yearly S1, back up to the yearly P. So the big reversals during the year, I find, happen at these yearly pivots. So now let's look at some 2020 yearly pivots. What do we got coming up for this year? Apple. This year, we're looking for the yearly R1 pivot, and I'm just using stockcharts.com. I'm not using any special software. If you go on stockcharts.com, if you add pivot points to your chart, change your chart to a weekly time frame, the pivots become yearlies. So it's just real simple. Apple this year, looking for 350 and 346. Sometime it'll go up to 350, and sometime it'll pull back to 346.
246.
246. Thanks.
Yep,
sorry.
got it.
Bitcoin this year, we're looking for a price to come back up to either 12,000 or 13,000. I've got two pivot point calcs on here. I got the Fibonacci yearly pivots, and I've got the Floor Traders yearly pivots. So sometime this year on Bitcoin, we're looking for it to come back up to either 12,180 or 13,000, as long as it holds above the yearly pivot at 81.82. Again, the yearly pivot is the bull bear line. When price is above that yearly pivot, prices
That's an important number for HODL people or Bitcoin traders. Because it looks like if it got through that, Jeff, you were looking at 4,000 or so.
Correct. Exactly. The comp so far this year, remember we just had a big pullback this week. The high so far this year is right at its yearly R1 pivot. Floor Traders yearly R1 pivot on the NASDAQ comp. We're looking for it to come down sometime this year to 82.85.
Another 1,000 points.
Yeah. I don't know if it's going to do it on this round or if it's going to wait later on in the year, but sometime. Copper this year, looking for it to trade between 251 and 303. The yearly R1, yearly S1. That's what we're looking for on copper.
Okay, well, but with all of those different S1s and R1s, how do you choose which ones, like you just said, what you're looking for? How do you choose those?
I'm looking for a confluence. See, there's a confluence on the S1s. They're pretty close, 251, 256. So when I see that confluence, I know that these S1s are going to be strong support. And when I see this confluence, I know it's going to be strong resistance.
Okay.
And I also respect price that is closest to the nearest pivot point.
All right.
is what I tell people.
Okay. Let's look.
Corn, looking for corn's got a bearish bias this year. It's below the yearly P at 399. It's probably going to come down to 351 or 330.
Be a good buy down there.
Here's
Euro pound.
Euro pound, currently testing its yearly S1 pivot right here at 83 cents. May go back up to the yearly P at 87 cents.
Okay.
Euro
That's what I'm
dollar.
thinking. Yeah.
Just bounced off of its Fibonacci yearly S2 pivot here at a dollar 078. May come back to $1.12. As long as it's below $1.12, it's going to have a bearish bias. It may go down to $1.05 later on this year too.
Okay.
That's the S3 pivot.
Okay.
And cable, bouncing off of its yearly pivot right now. It as long as $1.28 holds, should go to $1.34, maybe $1.38 this year.
Yeah, because $1.3738 is Confluence, so that's a
Correct.
possibility.
Correct. But we have to respect this one first.
Right. It's a process.
Correct. It is. It's usually a stair step. Gold, looking for 17. The first pivot was at 1640, and now we're looking at 1708 and 1760 is possible this year. But sometime this year too, it should pull back to 1488, 1461. I just don't know when, but sometime this year it probably will pull back. When price gets overbought, it usually pulls back to the P. When price gets oversold, it usually comes back to the P's.
And that's the yearly P there at 1460.
Correct. These are the yearly P's.
Okay.
So that's what we're looking for on gold.
Great look.
And nat gas. We're looking for nat gas sometime this year to come down to 153. That's the yearly S1 pivot. Nat gas is a bearish bias. It's below the yearly pivot for the year. Silver, looking for silver to go up to 1948 or 2031. I recommended it a few weeks ago when it pulled back to the yearly P here at 1739. That's where I bought some silver futures. And looking for 1948 is the first target, and then 2031 is the second target on silver.
And your bull bear line is at 1740?
1740 is the bull bear line, correct.
Okay. Good to know.
Same thing on SLV. Recommended a few weeks ago when it pulled down here to $16. Looking to take some profits at $18 and then at $18.89. So what I'll probably do is scale a third here, scale another third there, and let us alert, and then I'll let a third ride. That's the way I like to trade. I never sell all at once on my winners. I like to scale out of them. The only time I sell all once is on a stop loss.
Okay. Like that.
And SPX this year, looking for 3487. 3500 is the yearly R1 pivot, and 3000 is the bull bear line. That's the yearly pivot. So in my opinion, the SPX is probably going to trade between 3500 and 3000.
I guess the question is, which comes first?
That's always the question. I thought 3500 was going to come first because we came close to it a few weeks ago when we got up to 3400. So yeah, that's always the question.
Okay, so 3005 is a yearly pivot, bull bear line.
Correct.
Thank you, Jeff.
You're very welcome.
Okay.
And let's look at the dollar. It's currently testing its Fibonacci yearly R2 pivot at 99.73.
Okay.
It may go higher, it may go up to 101 and a half this year, but right now this 99.73 is going to be resistance.
Bull bear line on the dollar
is at 96.83.
Okay. Thank you.
And the dollar yen went up last week to its yearly R1 pivot. So far this year, it's been trading between the yearly P and the yearly R1 pivot. A weekly close, this is a weekly chart, so a weekly close above 112 will be the clue it's going to 116.
Nice.
But right now it's probably going to trade between 112 and I don't know if it's going to come back to 108, but probably 110 and 112 right now.
Okay.
So that's how I like to use the yearly pivots.
All right. A lot of great numbers you supplied for people. Okay, go ahead.
Here's oil. The yearly pivot is at $59. So as long as oil stays, WTIC oil stays below $59, we have a bearish bias this year. It may come down to $48. That's the yearly S2 pivot. So 59 to 48 is what we're looking for on oil. The Dow Jones last week came up to its quarterly R1 pivot, doing something a little bit different here. And we're looking for price to come down. We're looking for this correction to end when it gets down to around 27,661, 27,500.
Okay, that's not much lower.
That's nowhere, but yeah, we're not too far away from that.
Okay. And you're calling that just short-term support?
Yeah, this is just because I'm using a quarterly pivot, so it's just going to be short-term support. We've got a
Okay.
200-day moving average down here at 27,223. It looks like that might be a longer-term support.
Okay.
IBB bounced off of its yearly pivot. We're looking for strong resistance this year at the yearly R1 pivot. If it Fibonacci yearly R1 pivot, it's got the F in there. So it's a Fibonacci calculation. If it breaks above a close above 124, we'll open the door for 131. That's the floor traders yearly R1 pivot. So 113 was strong support. It should go to 124 or 131 this year.
Right. Define floor traders pivot.
Well, floor traders is the same thing as traditional pivot calculation.
Okay.
Okay.
Yep.
Fibonacci's are based on Fibonacci retracement numbers. Floor traders floor traders traditional pivots are the same.
There aren't any anymore though.
Yeah, there's
they left their pivots behind, so that's their legacy.
They left their pivots behind, and that's what the algorithm, that's what the programmers picked up, and that's what they're using right now.
Okay.
Cool. Algorithmic. SMH, we're looking for a pullback to the quarterly pivot here. Quarterly R1 was the high at 152. We're looking for a pullback. We're looking for this correction to end, this pullback to end here on the quarterly pivot here. And here's the 10-year. TNX, we're looking for a yield to come down to $1.30 to $1.22.
Okay.
On the 10-year. Last year, the yearly S3 and yearly S2 pivots defined that range. And XLF looking for price to come down. Again, the quarterly R1 pivot was resistance. So it's when that happens, price always comes back to the quarterly P at $29.42. That's where we're looking for.
You have anything at 28.50?
On XLF?
Yeah.
I do. I got at 28.50 is the yearly pivot.
Okay, that's my target.
Okay, right. Yeah. 28.50 is the yearly pivot. So
that's
that
would be a bull bear line down there, and
that's the bull bear line. That's a great spot to try a trade. Risk 50 cents or $1. You know, that's yeah, we like that.
See, we're collaborating now.
Yes.
Not just a regular old interview. So
that's
Jeff,
yes.
How do people follow this kind of work? And do you have something on your website to teach people how to do it, or do you hold webinars? Or
I do a little. I do it all. I have a website that I post. I have a chart blog. I have a video also that I just produced on the yearly pivots, and I marked it down for you guys. It's normally $89. I got it marked down today for $44, half price if you guys are interested. And in the webinar, I'll teach you guys how to use the yearly pivots, how to where to find them, which trading platforms have them. You know, lots of trading platforms have them, how I use them, how they're calculated. And I'll teach you a lot about the yearly pivots. So we've got that. I've also got a private Twitter account where I post, let's see if we can get into here.
You post your good stuff on your private Twitter, and the junk on your regular.
Well, yeah, I use you know, my private Twitter account for my clients.
I'm kidding you.
No, it's true. For instance, ExxonMobil, you know, I tweeted this morning, we're looking for price on ExxonMobil. We're looking for a bounce here on the yearly S2 pivot, possibly back up to the $63. So we're looking for support on 56. So in my private Twitter account, I post, you know, private setups here for my clients. And also every night I do the, I do the futures. Here's the YM today. It's doing a little triple bottom on the weekly S4 pivot, looking for it to possibly come back to 28,500 today. So I do a lot with futures, Bitcoin, oil, Nikkei. So this is what I post for my private clients and where to buy and where to sell, basically.
Okay, well, I'll tell you what, Jeff, you are a great example of what I say, that when people ask or people try and sell the secret to trading, that there isn't one. It's hard work.
Oh, yes.
So, I can only imagine all the time you put into your analysis and working with people every day. Money doesn't just fall out of the sky and drop into your account. You have to do the work.
Correct. And looking through the charts and looking for the
Yeah.
setups. And yes, it's a lot of work.
That's work.
Yes,
you
it
know.
is.
Okay, you don't have a jackhammer in your hand, but a lot of mental energy to do this. You can't be lazy, and I could tell with what Jeff's doing, he's a very hardworking technician. So,
Thanks. And we use weekly pivots real quick. Here's
okay.
the ES mini contract. Yesterday, it came down to the weekly S4 pivot. Right now, it's doing a little, looks like a triple bottom on the weekly S4 pivot. I think if 32.15 can hold today, it could go back up to 32.85. So far, the 50% Fibonacci retracement is the overnight high. So
Okay,
we use
32.85. I'm a seller up there.
so
Okay.
I use weekly pivots for short-term trades. I use the yearly pivots for longer-term trades.
Jeff, you're a pro. I knew it the first time we talked. I want to thank you for coming here and edifying our community. You could also follow Jeff on Twitter at pivotal_pivots. And his website again is www.pivotalpivots.com.
Thank you for having me, Dale.
Thank you, my trading warrior brother. I hope that pips rain down on you in 2020.
Thank you. Same to you.
Okay, buddy. That's Jeff York, everyone. Have a great day. Hope everyone enjoyed what we did here today. We laid it out on the floor. Remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Thanks again, Jeff.
Thank you.